Hi, everyone.
Hello.
So it's obvious we are the final slot for today. So great to be here today, presenting together with James from PrePro about cross-border payments and the requirements that you as a merchant have in entering these markets. But good news first. As we know, last presentation is the hardest one. So we would like to invite you for a beer after a very long day. So just come after the presentation to our stand right over there in Hall 3. Grab a beer. Just listen to James' part because he will tell you the hashtag to get your free beer from our stand after the presentation. All right. What do we want to present today? Just a brief introduction about what EVO and PPRO is doing. Then we will give you a short insight into the case study with our merchant aviareps and their requirements and challenges in terms of cross-border payments.
Yeah, then I'll jump in and I'll give a quick overview on the impact of digital payment methods, how it affected aviareps business, and as well as the future of digital payments, how methods are going to proliferate, and what you should consider moving forward.
Here we go. All right, who we are. So EVO Payments is an international payment service provider and acquirer for credit card payments. We are serving merchants in more than 50 countries all over the globe with more than 150 payout currencies. So especially when you want to offer credit card payments, it's very important to have a PSP supporting you and needs to be connected to your shopping system. We are based in Cologne. So perfect timing being here today after a very fantastic carnival season we had just ended up yesterday. So and with our connection to PPRO, we are able to serve you as a merchant all the local payment methods that you need to serve your consumers in every market.
Perfect. And PPRO, a lot of you probably don't know about us, or probably a lot of you have not heard of us, but we're born in Germany. We are an infrastructure provider for payment service providers, acquirers, any payment gateway, or any payments business out there. We provide a lot of the back-end connectivity to the most relevant local payment methods, as well as modular acquiring payments as a service solutions for any payments business that wants to sell cross-border, wants to expand globally, and offer their merchants the right payment mix around the world. We've got roughly 180 clients based around the world, and we give them access to over 100 payment methods from Southeast Asia to Europe to Latin America, kind of you name it, we help our clients gain access to the most relevant payment methods.
Perfect. So aviareps, cross-border solution. Who is aviareps? We want to bring the world to the people in it, it's their claim. So aviareps is a service provider for the hospitality, tourism, and travel industry. They are a kind of a solution provider for many, many very big brands like airlines, like hotel groups, resorts, travel agencies, and they are offering a huge service for sales, marketing, communication. As you can see, they are located in more than 60 offices with more than 40 countries. 800 people working for aviareps based in Munich, and as you can see, a range of services helping these merchants to grow. So very international, and as you can see here on their current payment setup in Europe, where we're supporting them. On the right side, you see the Visa MasterCard acceptance. So we are offering our payment card acceptance in every country within Europe where they are operating in. Credit card payments is still the most important payment method within Europe. There are some specific different situations in every market. So that's what James said before. And they have already some alternative payment methods in place. For Germany, for example, of course, GiroPay is a very important one. Also for the Austrian market, as EPS, which is also a brand of GiroPay. They are already processing American Express for Hungary and Germany, and Sofort as a very German payment method as well. That's the current setup, but that's not the end. The requirements from aviareps perspective. First of all, payout currency. So if you want to enter new markets, especially when the currency in the specific market is a different one than in your home market, it's important that your acquirer supports you in terms of payout currencies. If not, you're possibly facing FX costs, so costs for the conversion of the currency. Right now we are supporting aviareps with more than 6 payout currencies and more to come. In addition, Ideal and Bank Contact is right now in implementation via their solution. Also very important to ensure highest acceptance rate as possible. The consumer wants to pay by his most famous and popular payment methods. So very important to keep that in mind. And last but not least, chargeback handling, which is always very important when you accept credit cards. It needs to be very fast. It needs to be in real time. We can ensure that via our real-time chargeback system and also fast payout. You want to be paid out as fast as possible. In best time, it's per day, day-by-day payout. We can ensure that, and that's also one of their requirements that they had by choosing their acquirer. One very important point is SCA or 3DS. SCA means strong customer authentication. That means that the credit card payments needs to be secured by minimum 2 factors within the EU. So there are different ways to secure it by a second factor within the EU. It could be biometrics. So if you want to pay by credit card, you can use your Face ID, your fingerprint. You can use knowledge, so passwords. You can unlock your phone by putting your codes, many different ways of knowledge, and also possession. So if you're using your own device, your smartphone for shopping, then you are in the possession of your smartphone, which is also a second factor to secure your card payments and to secure it against fraud. So what is the disadvantage of that? It means that sometimes it could have a negative impact on your acceptance rates. So now it comes to TRA. What is TRA? Transaction Risk Assessment. That means that credit card payments can be processed without a second factor. The very big benefit is that it will have a positive impact into your acceptance rate for your consumer. So that means the payment process is much faster, much smoother, and much easier for the consumer. How does it work? So if you're about to choose an acquirer, keep in mind that the TRA rate depends only on the acquirer setup. So if the acquirer fits the requirements from the schemes from Visa, MasterCard, so it needs to, for example, it's called fraud reference rate. So how many frauds do the acquirer process? How many chargebacks? So it's a bunch of categories and things that comes together. The higher or the lower the fraud rate is, the higher the TRA rate is. So Evo Payments is able to offer 250 euros, that's the highest limit, to the merchant without SCA. So at the end, that's a very big benefit for the merchant because the consumer can pay much easier, much faster without using a second factor. So, and then let's over to James.
Perfect, yeah, thank you. So that was a really good example of how to obviously manage a lot of your payments now, what's relevant today, what payment methods does someone like aviareps need. You mentioned Bank Contact, Ideal, so forth. All of these are must-haves for European merchants today. But looking forward, what's going to be relevant for aviareps in the future, next year, 5 years, 10 years' time? And a lot of that surrounds digital payment methods, or what used to be called local payment methods. I think a few years ago, we used to call them alternative payment methods. And then the alternative became the dominant payment method in the market, like Ideal in the Netherlands or Bank Contact in Belgium. So they became local payment methods. However, now we call them digital payment methods because they really are the must-haves. What they allow you to do is they allow you to break into markets faster. So if you're a merchant and you want to move into a new market, you have to offer the right mix of payments from day one. If you don't offer the right mix and if you don't put your best foot forward, you're most likely going to lose consumers, your conversion rates are going to drop, and then you're going to have to spend a lot more time trying to win back those consumers back to your solution. So they help you break into markets faster, they help you save time and effort in getting off on the right foot first. They help you boost conversion. Obviously, if you're offering the right payment mix, you're going to convert more transactions. And ultimately, they allow you to increase the share of wallet. And these aren't just points I'm putting on the screen. To prove that, I'm going to show you some data from PPRO's transaction engine. So we've sanitized this a little bit. I can't share a lot of the details because of GDPR and data privacy, etc. But this is an example of a PPRO client who primarily, historically, just offered cards within Europe. Now, cards is still the dominant method of payment, but it's shifting and it's changing. So what this client did, along with PPRO, is we added the most relevant payment methods within Western Europe, and we aligned the go launch or the go live of a variety of their merchants to all go live on the same day. And we saw an immediate shift from one day to the next, and an additional 40% of volume was processed just by adding a handful of payment methods. So by adding the right mix, you really do get an increased share of wallet. And the most important thing here is you don't see any cannibalism. So by adding some of these payment methods, you're not going to lose out on your card volume. You're going to get net new customers shopping at your store. So you're going to reach into these new markets and access new consumers from day one. So it's extremely important. But how do you navigate this space? It's quite a fragmented space. I think we're just at the beginning of what needs to be done in order to kind of have the right mix of payment methods. So earlier on, we mentioned for aviareps that it was important for them to have Forts, Ideal, Bank Contact, the real big, chunky digital payment methods in Europe. That's the case today. And if you look back to about 2012, there were only a handful of digital payment methods out there. Actually, well, not a handful, I lie. About 10 years ago, there was about 2,000 digital payment methods globally. But of that, only under 50 of them are only relevant payment methods to look at. And I'm talking on a global basis. I'm talking about Southeast Asia, Europe, Latin America. There are only about 40 or so that you had to consider if you were a truly global merchant. Fast forward today, that number's already at 140. So a huge leap in adoption of these alternative digital payment methods. And I'm pretty sure if we gave the same talk, same time next year, that number is going to be about 250, 300 or so. And there's a variety of factors that are causing this to happen. One is the adoption of smartphones. Obviously, everybody's got a smartphone in their pocket. Most people choose to pay with their smartphones rather than the piece of plastic in their wallet. Millennials and kind of Gen Z, Gen Alpha that's coming up, they're going to be digitally native consumers. And the more of them that come to age, the more of them are going to want to adopt these new forms of payments. That's a key driver. The second key driver is regulation and government-backed initiatives. So it's not as exciting as smartphone adoption or how technologies proliferate to the market, but government-backed initiatives is really pushing a lot of these payment methods to become the primary payment method in the market. So I've got 4 examples here to run you through today, and there's a lot more that I can run you through. So the first is Pay Now. It's a Singaporean bank transfer method, and that within a 3-year period went from 0% adoption up to 80% adoption within the market within 3 years. So a massive, massive shift in how consumers would shop and interact online within Singapore. PromptPay is another one from Thailand. I think there within a 2-year period we saw a similar increase. It's Pay ID in Australia. That's again, it's backed by the government, and they're supporting a lot of consumers to move onto these markets. And the last one, and probably the most exciting one, is UPI in India. So UPI in India has been around for quite a few years. It's run by the NPCI, the National Payments Corporation of India. And again, within a 3-year period, they've gone from 0% adoption to up to, I think it's about just under 40%. So I can't see it that well here. But over the next 2 years, they're predicting that to move upwards of 80, 90%. So if you're doing any cross-border payments within India, now the largest market in the world, overtaken China, you will have to use UPI. You won't be able to use a Visa, a MasterCard, or an Amex. So in order to access these markets, the government is mandating you use this. And we're seeing this happen in different countries. In the US, you've got FedNow. In Brazil, you've got payment methods like Pix that are government mandated. So the rise of smartphone adoption, with regulation and governments pushing consumers towards these new forms of payments, they really are becoming the norm. So they're no longer nice to have. They are certainly must-haves moving forward. And it's the case around the world. So it's not just India, it's not just Europe. We're seeing the same trends around the world. So e-commerce we know is growing. That's why we're here. It's a great industry to be in. But within the e-commerce markets, the share of wallet for digital alternative payment methods is growing at even faster rates. So with that, it's a really quick summary I've put together here. I know we've got the skeleton shift. But yeah, we'd love to answer some questions. If we don't have any questions now, come to the Evo Payment stand, speak to anybody there, hashtag Evo and PPRO. Love to discuss more about this over a beer if we've got any more questions now.
Thank you.
Thank you very much, Kristina. Thank you, James. Thank you for listening, and thank you for the first questions. Who wants to start?
Good evening. Do you focus only on B2C payment methods or also B2B?
So the primary focus is B2C. However, there are a few B2B payment methods out there that are focused on these digital rails, but I would say 90% is B2C. And especially also the majority of the growth we're seeing as well is within the B2C landscape. There's a few we're seeing coming up now in B2B, but the innovation tends to happen on the consumer side, and then a few years later, we'll see it being adopted on the B2B side.
So we as an Ecora, we see these trends from B2B coming more digital, getting more away from buy now or just pay by invoice. So we as an Ecora, we see that. We have a lot of merchants selling B2B and using credit card payments, but we are also in conversations with some external providers, integrating them into our gateway just in order to have an alternative for merchants selling B2B. Of course, very important, and we're working on that as well. And we do have solutions in place for that.
Thank you.
Thank you very much. I might have a naive follow-up question on that, but why is there a difference between the B2B payments if they pay digitally? Like, sorry if I'm asking a stupid question, but
well, at least, I mean, some of the challenges we're seeing with digital payment methods, particularly, is, so for example, if you take an ideal transaction or a so-forth transaction, it's very easy for me to just access my bank account and for me to authenticate the transaction. In a B2B environment, a lot of those bank accounts are not compatible with the schemes because you might have to have 2 levels of authorization before the transaction be approved. So it's just it's like a slight tweak on the B2C flow.
Okay. And 5 levels of CFOs like signing before you can get anything done in the company. Sounds familiar. Yeah.